The number one question I get always revolves around mortgage rates. So let me show you one place to go, and you're going to have one application, one credit pool, and you're going to be shopped over 130 lenders throughout the country in one spot. So that's what we're going to talk about next. So don't go away. The biggest question I usually get is, Dan, what's today's rate? And rates vary all over the place. And then somebody says, well, are jumbo rates higher than conforming rates and so forth? So let me just kind of pull the curtain back behind how mortgage rates work. Okay, so we start with the MBS yields. Okay, and we follow that if you follow my channel. If you don't, please follow my channel and you can find out what the MBS market is. So that's our benchmark. That's our base mortgage rate. Let's put it that way. And then what happens is the lender gets involved and then they put in profit margins. And they also, let's look at it this way, is they turn off and on the faucet. And if you watch some of my other videos about this, it's people still don't get it. So I'm trying to make it as simple as I can. So here's what happens. And I'm going to show you a detail here, and you're going to see how the variations in mortgage rates are from lender to lender to lender. So here's what they do. They come in and they say, okay, here's today's rate, or here's the benchmark rate. And then we want a profit margin of X, okay? But many times they want to specialize in a program that maybe they have higher profit margins there. Maybe they just have a unique program that somebody else might really not dive into. But what they do is they'll turn down their rates. They'll turn them down when they want to bring in more and more volume in regards to that program, or let's say that piece of the puzzle. Let's say, for example, you have 100 pies. You're really good at making these pies and you're real efficient that way. Most of your ovens work with that specific pie, so you can make that pie really quick, really efficiently. So you then put in that pie and you're like, okay, we need to sell these things, so let's drop the price a little bit versus our other pies. And more people are going to buy that pie. Maybe that's a good analogy, maybe it's not. But I hope you get my point. Lenders can say, you know, if I want more of this loan, I got to just reduce my profit margins a little bit, and we can flood the gates with that particular loan. So if this view is a little off, the reason being is I'm trying to hide some things that I really truly can't show you or shouldn't be showing you. So you're going to see pieces of this puzzle, but there'll be enough here for you to get it. So what we did in this situation is at the top, we have a client and they're looking to buy a $550,000 home and they're looking to put 20% down. So we have an 80% loan to value, right? The credit score is the same. Everything else, it's exactly the same. All right. So now you go down through here and here's all the lenders that we can choose from. All right. I'm set up with all of these companies. All right. So at the top, we start, this first company will offer a 4.375 rate. And over here at that rate, it's actually going to give you a $1,756 credit, lender credit back. I'm going to do a video next week and how lender credits might be able to help you buy a home. But for this purposes, I'm just saying this lender is offering this rate, 4.375, and they're actually going to give you a $1,700 credit check to use toward any other costs that you might have. All right. Now, again, it is the exact same program, the exact same customer, same credit scores, same home, same loan amount, same state. All right. Let's just go through here and you're going to see these are the same but different. The only thing different, it's a different lender throughout the country. All right. Here's everybody that I have the ability to broker your loan through. All right. So let's go down through here. And for example, I'm going to go and we'll stop right 3, 2, 1, stop. All right, we're going to go across here. Let's zoom in. So now this particular lender will go across here and the rate is 4.375. This lender would cost, to get that rate, it would cost you $7,630. You'd have to pay to this lender, not to me, not to anybody else, this lender to get that rate. Okay? Compared to the exact same packet, same loan, same everything with this company, and they're offering a $1,700 credit. That's a $9,000 difference. Sorry, I'm talking slowly, but it blows my mind. Where some people will say, I called around and this is what I got, and they'll take it. All right. I'm offering you the ability. It is, again, let's repeat how this all works. You apply online. I'll give you the link down below. We're going to pull your credit one time. You're going to have one loan officer or one mortgage advisor to work with their specific dedicated processor. That's all you're going to work with. We're going to scan your loan all over the country. We're going to find that for you. You can't do this on your own. It's virtually impossible because by the time you get a quote from the last company, rates are changed, or it's 3 days later and rates have changed. So that is the most, or the easiest way I can explain it, using how do you find the best mortgage product for you in the industry? One website, one credit pool, one mortgage advisor, and we can take care of that for you. So if you find blooper alert, if you find value in my videos, please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. I'll have all the information down the details below. There'll be a apply now button, an 800 number to call us, or you can even schedule a meeting. So thanks for watching, guys. God bless. Have a great weekend. Bye-bye.